Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Let me start by observing that both the Standard & Poor's 500 and the TSX have reached up to their respective key breakpoints. The super growth price for the Standard & Poor's, that's 3.5 times adjusted book, and the high conservation price, that's 1.5 times adjusted book for the TSX, pretty much with dead precision, but neither has been able to break out. Both the S&P and the TSX are somewhat intriguing, as both have tried for 4 successive days to break out, pretty much at their measured, precise SVA peaks, and have failed every time, at least so far. Today is clearly no exception. In the past week, therefore, to no surprise, the FANG stocks have traded indecisively with no new signals being rendered. We are looking at a kind of a hold the line sort of week with nothing clearly being indicated. Well, every week cannot bring us new trading information, and this is certainly one of them. Personally, I continue to be concerned that we may have reached a peak in the market, as the overall values in the U.S. market in particular are poor, and lower valuations would be in order. Since the beginning of this current rally, it has largely been the growth stocks, which were so badly beaten down last year, that have led the way back in this rally to date, sometimes with spectacular results, but not, I have to observe, with spectacular fundamentals. Indeed, far from it. It has often seemed that the worse the values, the larger the rally has been. And of course, as a result, I see a number of commentators and pundits proclaiming that we have already seen the lows for the market, some suggesting that the market lows were back in October and that a new bull market is already underway. As I did last week, I would observe that we need to see the S&P breaking out over its super growth price before I could agree. Until then, I would label what has occurred so far as another market rally, albeit a strong one for the growth stocks. And the S&P is pretty much right there as we speak. We should get a resolution, I think, of this conundrum very soon. So far, the answer appears to be not a new bull market, just a strong rally. The problem that we face is that when a stock or an index reaches its peak, if indeed we're at a peak, it can take time as the battle between the bulls and the bears works its way through in coming to a final resolution to the downside. Of course, one way to decipher the potential trajectory of the market itself, what it will be taking is to see what the majority of the individual stocks are telling us. For instance, at the peak of the market in late 2021, in the NASDAQ in particular, the smaller stocks were falling away in droves, leaving more and more work to be done by the really big cap stocks to hold up the overall market averages. Eventually, and it took a full 3 months for a resolution, the big caps succumbed as well. And that was all she wrote. So this time around, maybe we can do the same thing. Well, we can't look at the majority of the NASDAQ 100 stocks, what they're trying to say on this FANG Friday webcast. But we can see what the majority of the FANGs are trying to tell us, if anything. So today, let's see. By the way, I will be on BNN on Wednesday, March the 8th. So if you have any non-FANG questions for me, getting them in now while you have a good chance of your question being put on the air. Okay, just email marketcall@bnn.ca. That's marketcall@bnn.ca with your stock inquiry. Now, before we take a close look at those FANGs and what's been going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start off with Amazon. And Amazon, well, look at that. It had a beautiful hit at its mid-super growth price, held there for a while, rallied, and had a perfect hit at its bubble price, and then has set back. Okay, I still look at the trend of the fair market value, and I do suspect that this stock probably has miles to go on the downside. However, we'll have to wait and see. Alphabet has been doing what I call indecisive trading. Look what happened when Alphabet was at its mid-super growth price. See? Look at that, sort of back and forth across the line. Well, remember we just saw Amazon with dead precise hits, and Alphabet has just been kind of dithering on either side. Well, when we get stocks that dither, they tend to resolve on the downside, and that's what happened to Alphabet. Well, guess what? It's happening again, only this time at the LSG price. That's 4.5 times book. And, well, we can see what's happening to the fair market value as well, of course. As you well know, Alphabet got a bit of a black eye with its AI contribution against Chat GPT. Didn't come across very well as far as the market was concerned. Well, okay, it was Microsoft that brought Chat GPT to market, so and we know what happened the first week. They got 1 million people subscribing to it. Well, tell me about the follow-through. The follow-through has been positively indifferent. And indeed, what we see here is, again, the same indecisive trading that we saw with Alphabet. The stock, by the way, has pulled today right back to its HB1. That has to hold, or we're back down into something unknown. By the way, you would think with that new Chat GPT that maybe the analysts would sort of raise their forecast. Nope. It continues to be quite indifferent, and their last quarter was quite indifferent as well. Apple, it's hard to say about Apple with the stock buyback business. If I extend I think the putative breakpoint, I think that Apple may be still kind of sitting on its HB6. But that remains to be seen. I mean, here is a stock with poor fair market value, being 46% below the current price, and very, very expensive to boot. Tesla, beautiful bounce off its bubble price, broke out over its HB1, that's 9.5 times book, broke out over its HB2, that's 12 times book, and is trading between these two breakpoints, HB2 and HB3, so that's 12 and 16 times book. But look what's happening to the fair market value. Continues to drift lower and lower. The stock is now 64%, or has a 64% downside risk to its fair market value. I would say that if it either fails to hold it at HB2 or reaches HB3, in both cases, I would sell. NVIDIA is between two breakpoints, but I have to say right now that NVIDIA will be reporting next week, and we will have some kind of an idea, therefore, as to what the actual balance sheet and its actual intrinsic value will be. As it's between two breakpoints, no action is required. Netflix hit with precision at its bubble price. Remember, as I said some time ago, was likely to happen. When a stock which has been trading in its bubble zone, fails to hold at its bubble price and drops to its super growth price, it is very, very common for the stock to rally all the way back to the bubble price, and that's exactly what happened with Precision. Well, hasn't been able to get anywhere. There's been a little uptick in the fair market value because I think some of the analysts have thought that that those results that they reported were pretty good. I thought that they were very, very indifferent. Well, we will see. In the meantime, I would not be holding Netflix under any circumstances. Finally, we get to Meta. And here, of course, Meta had not exactly a beautiful bottom at its growth price. That's 2 times book value, having fallen all the way from its bubble price at 7.4. But it loosely held, broke out over its mid-growth price, which is the point at which I said, okay, it's confirmed, I'll get in. Then we had that nice rise, and then Zuckerberg, of course, promised great things for a refurbished, not a refurbished balance sheet because he's buying back stock, but for a refurbished fair market value. He's going to try to get some more value in there. Well, what happened? The market just loved it, and it jumped over its super growth price, and therefore enabled me not to have to make a decision there. Well, that's all right, except look what's happened lately. Okay? It almost looks as if we have what is known in technical analysis as an island reversal, because the super growth price is not holding. Now, we do have to give the stock the benefit of the doubt by what we call our 3% 5-day rule. If the stock breaks by 3% and holds for 5 days, we sell. Otherwise, the stock may pull back over the line again. So we have to wait. But listen, we have to watch that very carefully now. So to sum up, what have we learned this week? First, Amazon may be trying to decide if enough is enough or more is possible. I would not choose to own or hold the stock unless it can break above its bubble price, period. 2 weeks ago, I rated Netflix as a weak hold, and I should have simply called it a sell at its bubble price, that 7.4 times book, unless or until it can break out. It has poor industry fundamentals, and its quarterly results were, in my opinion, weak, and its forward market guidance was weak as well, despite the market's apparent optimism. What would I do now? Personally, and from an SVA perspective, I would sell. I have been cautiously optimistic towards Alphabet and Microsoft, as they have both been dithering at either side of their recent breakpoints for some time. Neither enjoyed an exactly stellar fourth quarter. Alphabet, of course, suffered a major embarrassment with its proposed AI entry last week, and the stock plunged right back to its LSG price. That's 4.5 times book, and is now below that level. I would sell without hesitation if that valuation level fails to hold, as may be the case now. I would take the same action in the case of Microsoft at its HP1 price. That's 9.5 times book, if it fails as well. Interestingly, the very recent setback to that level tells me that the market is not exactly giving Microsoft a big vote of confidence for its new Chat GPT service. I have never called for a sell on Apple. And now that we have the new balance sheet in, it does appear that the HB6 price may be barely holding. At 33 times book, its intrinsic value does speak volumes to me, asking, what is this stock doing up here this high? I would personally not hold something that looks like such poor long-term value, but our SVA work remains uncertain. Still, Still safely in what I would term my Phantom FANG portfolio are first and foremost Tesla. Tesla has been stellar off its bubble price low and continues to soar with the current FANG stock sentiment. However, it's not cheap, and the company is in increasingly crowded marketplace. Keep in mind the sell parameters that I outlined above. NVIDIA keeps signaling that higher prices may lie ahead, although the industry parameters for the semiconductors appear to be horrible. I would sell if the HB4 price, that's 20 times book, fails to hold, or if the shares manage to rise through the HB5, which is 26 times book. Keep in mind, we are waiting for the new balance sheet, which we will see hopefully next week. Finally, Meta was looking very promising, as we saw. Last week, I did say that only if the SG price fails would I sell the shares, as otherwise the shares may have further to go on the upside. Well, yesterday and today, the SG price, that's 3.5 times book, looks to be failing. I would remind you of our 3% 5-day rule and offer an extreme caution warning. I will conclude by asking, has the S&P 500 seen its peak? So far, that's all she wrote. And those bad news bears may be back in style again. For certain, the values in both the S&P and the NASDAQ 100 are far from being investment quality, particularly if you're looking for a new bull market. For a little while, investors, or more likely gamblers, have seized control of events. But unless or until the S&P is actually able to break out over its recent high extreme, its super growth price, I would treat those speculative values with considerable caution. I will again end by noting that if you want to learn more about SVA and missed our introductory webinar, you can click the link at the end of this video right here. I will close with a reminder about my BNN appearance on March 8. Send in your questions now. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I will see you next week.